In the last 5 years, Apple is up 213%. Year to date, it's up 42%. And during this past month, Apple has been all over the news. Apple strives in China and India amid a global smartphone slowdown, exactly when Apple will release Apple Watch Ultra 2. New Apple exclusive reveals iPhone 15 price shock. When will Apple announce the iPhone 15 launch date? Apple makes plans to move production out of China. As it pertains to expected growth, Apple's next year's projections are a decent 8.9%, and the next 5 years looks like that growth will continue at a steady rate at 6.36%. When it comes to key valuation metrics for Apple's price-to-sales ratio, it's a little bit higher than its 5-year average and way higher than the index. We want it lower. For that, I give Apple a strike. For its PE ratio, it's higher than its 5-year average and the index. We also want that to be lower. Another strike. For price to cash flow, it's higher than both the 5-year and the index. Again, we want that ratio to be lower. Yet another strike. Same with price to book. Strike. For PEG ratio, we want the ratio to be above 1, but we see it at 2.6, which makes it even worse when it's also above its 5-year average. Strike once again. When we look at operating performance for Apple's return on assets, it's pretty good, higher than its 5-year average and much better than the index. For that, I give Apple a plus. For return on equity, higher than its 5-year and the index, another plus. Same goes for its return on invested capital, better than both its comparisons, plus. As for its key metrics, Apple's gross margins are higher than its 5-year average, a plus. For operating margins, also a little bit higher than its 5-year, plus. And same goes for its comparison for net margins, even including the index, another plus. If you're a dividend investor, Apple isn't really worth it unless you're investing millions and maybe billions. This only pays 96 cents per share, translating to a 0.53% yield, a strike. But including its buyback yield of 2.9%, we've got an annual yield of 3.43%, which is good, but compared to its 5-year average, it lags behind. That's a strike. When we look at the payout ratio, Apple's paying out only 15.6% of its profits to shareholders, which is less than its 5-year average. Another good sign, a plus. The balance sheet is a snapshot of Apple's financial health during its most recent quarter. We see its assets, which is growing, that's good. Liabilities, which is also growing, that's not good. Debt, which is slowing, which is good. Equity, which is slowing as well, that's not good. Overall, that's still a plus. Cash holdings are down, but it's at a respectably high number, a plus. Looking at cash flow, I want to focus on the free cash flow. Right now, Apple is swimming in cash coming through and it's going up, which is good. That's a plus. Just from what I see from its key financials, Apple has a really good and growing business on the back of the tech breakout. But it's hard to justify the expectations with what I see, and Apple is more overhyped than what it's been in the past. When we see what price analysts give Apple, on the low end, we see it at $149 and the high end at $240, with the average fair price at $200.68 per share. Looking at the 6 most recent recommendations, all but one maintain a buy rating. Even when we look at Graham's number, book value at $3.85, earnings at $5.97, we get a Graham number of $22.74 per share, making Apple incredibly expensive right now. But unlike analysts who are too optimistic and Benjamin Graham who's too conservative, I give a different fair price. But before we get to that, join my Patreon. You'll get access to every grade from every company I've analyzed. It's updated all the time. Go to patreon.com/GrowthShares or click on the link in the description. We can probably all agree Apple is very overhyped, but is it justified? So many other people know that already, but should you buy it at its current price? I give Apple a fair price of $157.61 per share. Right now the stock is just too expensive, and you'll see that many long-term investors will also think so as well. In the end, I give Apple a final grade of 55 out of 99. Overall, a good, growing company, but not at such a bloated price. I'd wait until there's a big pullback to get away from that speculative territory. Tell me what you think of Apple. Invest wisely, and as always, take care of your money.